Cryptocurrency is a volatile investment, and you should always do your research before entering the market. In this video, we'll discuss when you should sell your cryptocurrency holdings and how to decide which coins or exchanges to use. When the price is rising, you should buy low. When it's falling, you should sell high. This is a general rule that applies to most markets. When the market value of an asset increases over time, selling becomes more profitable than buying, and vice versa. As an example, let's say that you're looking at stocks in your portfolio and they've gone up by 5%. You may think I could buy some more. But if they have gone up by 10% since last year, or even just doubled, you might want to consider selling some of those shares so that you can get some extra cash in your pocket now before prices go back down again. When the price is falling, it can be tempting to sell everything and run for the hills. But unless you're a short-term trader or new to cryptocurrency, this is not the right time to do so. Cryptocurrency markets are still in their infancy, so there will be ups and downs along the way. But as long as you stick with your investment plan and don't panic sell at every turn, which would only end up hurting your ability to make money, then holding onto your coins should pay off over time. If you're looking at buying cryptocurrencies here, if you're interested in getting involved but aren't quite sure where yet or what type of investments might work best for them, like how many coins each one costs, then I would recommend trying out Coinbase for starters before moving on to something like Binance later on down the line if necessary. If the market is still down, it might be a good time to buy another coin. You could save money on a new purchase or get better deals on coins that you already own. When the cryptocurrency markets are down, it's harder for people who want to sell their holdings because there aren't many buyers and sellers in the market, and if there are any buyers, they're looking for lower prices than before. But don't worry. This doesn't mean that this will always happen when everything goes south. Sometimes an uptick happens after a crash instead of during one. For example, this can happen because people start buying again as soon as they see how much value has been lost in their portfolio since its peak value last year. Once again, be sure not let yourself become too excited by any recent price increase. You may have missed out on a good opportunity. You may be able to get a better deal elsewhere. You may be able to get a better deal if you wait a little longer. You may be able to get a better deal if you hold onto your coins. Cryptocurrencies are not always easy or obvious, but they don't have to be. If there's something that doesn't make sense about the way cryptocurrency works, don't worry, there are plenty of ways for us all, and ourselves, to learn about them together. We can start by asking questions and seeking answers from experts who know their stuff well enough not just hand us off something factually inaccurate, like Bitcoin is created by miners, but also ethically questionable, such as Bitcoin mining is illegal in some countries. The internet has made this process easier than ever before. We no longer need just one person who knows everything about how things work in order for society as whole benefit from their expertise. A market crash doesn't necessarily mean you need to sell everything, though it may be a good time to reevaluate your holdings. If you have been holding onto your cryptocurrency for too long and want to get rid of some of it, this might be the best time. It is important not only how much crypto you currently hold but also how much crypto was purchased in the past few months. It can help you decide whether or not it would be worth selling any specific coins at this point in time, or even if they could still go up. Of course, this is not investment advice, and we can't provide any. Always do your own research before entering a cryptocurrency market. The best time to sell is when you decide that your price targets are reached and there's no more room for growth. Then it's time to start looking for alternatives that will bring in more money than the first one did. When should I buy or sell my cryptocurrency? There are several factors that determine when it makes sense for an investor to purchase or sell their digital assets, whether they're holding their coins on their own or through an exchange, what type of token is involved, whether those tokens are supported by any service providers. Timing is crucial for all kinds of investing, and cryptocurrencies are no different. The time to sell is when the price is rising. The time to sell is when the price is falling. And yes, if you're looking at your holdings objectively, then there will always be a time in which you should be selling them off. But that doesn't mean it has to happen right now. The most important thing about timing your cryptocurrency investments is knowing when they should go up or down so that they can be worth as much as possible while making money off them at their lowest point, or highest. You can do this by using tools like CoinMarketCap or TradingView so that you know what coins are seeing major increases/decreases in value over certain periods of time, and more importantly where those changes are happening within these graphs themselves rather than just overall market movements. It's important to remember that this is just a guide, and you should do your own research before making any decisions. It's also worth noting that we don't necessarily suggest selling everything at once during every market slump, and if you do decide to sell, make sure you have a plan in place as well. If the price of cryptos are rising or falling too quickly, then it may not be a good idea to sell until after there has been some time for stability.